Meta is being hit hard after a miss on EPS. Microsoft also seeing some pressure after hiking its CapEx spending. Alphabet, though, is soaring on its fourth quarter beat. Let's get perspective from an analyst who covers those stocks. Gil Luria is head of technology research at D.A. Davidson. Gil, just looking at it right now, and Meta's off by 93 right now. Are investors overreacting, do you think? And thanks for joining us.
Yeah, thanks for having me. Yeah, we think investors are overreacting. Meta is still in founder mode. Mr. Zuckerberg will invest what he feels is necessary to compete in the future of AI, even at the cost of growing expenses and CapEx faster than revenue. Mind you, revenue for Meta is growing very fast. They just grew revenue 25%. That was an acceleration from 22% and a lot faster than Google that's growing 15%. So Meta is a share gainer in advertising. And part of the reason they're gaining share is they're using AI to serve better content, more targeted ads, which means they can charge more for those ads. And they're seeing a positive inflection point in being able to do that. So more ads for more dollars an ad. And that is giving Mr. Zuckerberg the cash that he wants to spend on competing in AI. AI is a sport of kings. You have to build massive data centers in order to have winning models. And he is intent on being one of the winners there. Investors are pushing back on that and saying, well, you can grow investment, just not faster than revenue. That's not his approach. He's still in founder mode. And there's going to be a reaction like we're seeing today.
Any worries that he's chasing rainbows? I mean, the big thing for him is the superintelligence, the idea that we can create AI that's smarter than the smartest human being. Any concerns that he may get lost in that chase?
I actually think that the approach that Microsoft, Google, Amazon, and Meta is taking is actually a very thoughtful one, which is to say, we will take the risk of overbuilding to make sure we don't lose. Because even if AI doesn't continue to develop and the demand doesn't grow exponentially like we think it will, we will still need those data centers. Meta will still need those data centers to serve up Instagram and Facebook and WhatsApp. That's not going to change. So even if it overbuilds over, let's say, the next year or two, and demand for AI doesn't show up, it can still use those data centers for the core business. It can just pause construction and digest it over a couple of years. So then the pressure on margins is short-lived. These companies all need that capacity one way or another. They're just betting that if AI does take off exponentially, they want to meet all that demand. And right now they do have demand for that AI compute. They're building for it. Worst case, they'll use the capacity for something else.
All right, and you have a buy rating on Meta. Quick reason for that, then we want to get to the other two.
Yeah, so for Meta, we expect them to continue to grow faster than their peers. The valuation now is much more attractive than Google specifically, even though they are growing faster than Google. And we wouldn't bet against them in terms of winning in AI. They have all the consumers. So OpenAI has done a fantastic job of getting an early start with ChatGPT, but they're still at 800 million weekly active users, where Meta has 3.5 billion daily active users. It can offer them the same chat at less than ChatGPT needs to charge. So we're very early in this race for consumer chat and wouldn't bet against Meta, even as it grows the core advertising business.
Okay, Alphabet next. It's up $14 right now. People seem to be liking their results. Why is that?
Well, just a couple of months ago, they were very much out of favor and considered a loser, and nobody would give them any credit for all their other great businesses outside of search. And that's just changed. Somehow the sentiment changed. A lot of it had to do with the win in the DOJ case. And so now they're getting credit for all their great businesses, the cloud business, the TPUs, the Waymo. And in search, I think that there's starting to, some complacency is starting to set in, as if Google search will continue to be the winner, when we all know that we're now using ChatGPT to answer questions that we used to ask Google. And ChatGPT is just starting on the monetization. There's going to be a day in the next 12 months where ChatGPT is going to turn on ads. And then as an advertiser, instead of having to take all of your budget to Google, you're going to have an alternative. So we would watch out in the next 12 months for what happens to Google search when ChatGPT turns on ads. There may be a hiccup there, and that's why we're on the sideline.
Okay, and last one is, of course, Microsoft. Investors not too happy with the results. It's trading down $14 right now, almost 15.
Yeah, Microsoft is still the best bet on the future of AI. And the reason is they will do well in a very wide range of outcomes. Like we said earlier, there may be an outcome where AI models are as good as they're going to get, and there's not going to be exponential growth. And then there's a scenario where AI does take off exponentially. Microsoft will get tremendous value either way. They have the customers. They're ahead of the curve in monetizing AI. They just accelerated Microsoft Azure growth to 39%. That's a $75 billion business, recurring revenue, that they are growing by 39%. The stock is down because people were expecting 40%, but that's splitting hairs. The big picture is they're taking share here. They have overwhelming lead in providing AI for business customers. They have the cadre of customers that need their services. They're still the biggest provider to ChatGPT as it ramps up its consumer demand. They're still the best positioned company in AI. That hasn't changed, and they should continue to do well from here.
Okay. Gil, thank you as always for joining us.
Thank you.
Gil Luria is the head of technology research at D.A. Davidson.